You are locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave SEYMOUR and Nathan Amaral.
Get it right. Get the name right. The name's got to be right. What's up, Dave?
I'm grumpy.
Yep, we're both
laughing.
laughing.
I'm grumpy and I start giggling.
Oh man,
buddy. How are you?
I'm doing good, but you know, having those days, it like, you know what the reward is. And sometimes you have to like go through these moments, and but the reward is always so much better. It's just how it is.
Sure it is.
Okay, wait. Let me tell you a quote. Let me tell you.
Okay, give me a quote. Hold on.
Okay.
Drum roll. Nathan's gonna give us a quote.
No, it's not like Nathan's. No, but it was really powerful. It was really powerful. So recently, I told you I started golfing, right?
That's right, you did.
Yes.
You did tell me that.
Yeah. So I
get a
golfing.
hole in one yet?
No, come on.
Have you found the toe wedge? My favorite club.
The what?
The toe wedge. It's when the ball's not where you want it to be. You kick it with your foot when nobody's looking. That's the toe wedge.
No. Toe wedge.
My favorite club.
Yeah, I can tell. I'm not playing golf with you.
I'll win.
Yeah, pretty much. Went for my lessons today. I hired a coach and went for one of my lessons today. And you know, it was interesting. He said, "Nathan, today I'm not going to work on your swing. I'm going to work on you." I was like, "Okay." Yeah. I was like, "What do you mean?"
Hold on a minute. That's a little intrusive.
Yeah. I was like, "Well, what do you mean? What are you talking about?" He said, "No, today I'm actually going to work on your mind, and I'm going to get to know who you are, and we're going to change the way you think about, you know, we're going to change the way your mind is so we can to improve your swing." So I was like, okay, whatever. So anyway, we go out there and he starts asking me questions like, what makes you happy? Like, we're just getting all like going down the road, right? So
philosophical.
Yeah, it's philosophical, right? So he says, what makes you happy? And why do you work? Right? And I'm like, what are you talking about? And he's like, how best do you work? I'll give you a quick example. I said, well, listen, I'm a starter, but I'm not a finisher. That's one thing I know about myself. And one thing I know is whenever I start a project, I always need a business partner or a strong assistant on the side of me to help me get over the finish line. He's like, okay, so this is what you're going to do. I want you to take a few steps back away from the tee, and I want you to get your grip ready, do your little thing, and then I want you to walk up to the ball, and then I want you to take just 1-2 seconds and hit the ball. And I was like, okay, sure. So I did exactly that, straight. Nailed it straight. I was like, all right, whatever, luck, right? Do it again. Nailed it again, straight. And before I was sitting there at the ball, I was thinking about my shot.
Yeah.
And I was over-analyzing.
Yeah.
He made a very powerful statement I want to share with you today in my philosophical coaching lesson.
Golf class.
Golf class today. He said, you know, athletes can work for 10 years, can fail, they will fail for 10 years, 15 years for one successful moment.
Yeah. See you next week.
I was like,
you can't do anything now. There's nothing we can talk about that's any better than that.
I couldn't. And I was like, wow, that's so true. He's like, yeah. He's like, when people, whether they're running for the Olympics or a tournament, they are training and failing for years to make one moment memorable, to make it all. I was like, wow.
So good.
Yeah.
So good. Look, you're an entrepreneur as I am, right?
Yeah.
So we both have those sleepless nights, shall we say.
Yeah,
okay?
Yeah.
So I had one of those sleepless nights the other night. With a bit of luck, I've got the guy on here. I hope I followed him. I didn't.
All right.
I'll never be able to find him again. So it was one of those sleepless nights. It's about
wait. Was it on YouTube? Was it on YouTube?
No, it was somebody I followed and listened to on Clubhouse.
Okay.
So it was a room on Clubhouse. It was very successful entrepreneurs, and the host of the room was interviewing the former CEO of T-Mobile, right? So I can't remember his name. I think it was John something. But anyway, they were talking about lawsuits and challenges and just challenges of being an entrepreneur. So on Clubhouse, when you find somebody that you're interested in and you like what they're saying, you can click on their bio. Their bio will drop down, and you have an opportunity to like follow them on Instagram or something, try and connect.
Right.
But the bio is really important because it talks about who that person is, because you're only listening to their story a little bit on Clubhouse in a room. So I look at the guy's bio, and it was almost like his own definition of an entrepreneur. And I'll give you the highlights. First one was, an entrepreneur generally doesn't get paid for 4 years. An entrepreneur will quit a 40-hour-a-week job to work 120-hour-a-week entrepreneurial journey, right?
Yeah.
They will consistently fail to the point of losing friendships, marriages, relationships, right? Maybe even their shoes.
Yeah.
But the point I'm getting at is he was telling the truth.
Yeah.
So if somebody's selling you a dream on, financial freedom in 24 hours, run the heck away from them, man, because they're full of shit. It's not real, right?
So true.
It's not real. I am that athlete, right, that has been, practicing and pivoting and repositioning for, 15? How long have we been together? 15 years, 16 years, something like that?
Yeah, it's been close to 15, yeah.
Yeah. So 15 years we've been, looking for that moment of perfection.
Yeah.
And as soon as it arrives, because it has in both our careers and lives, as soon as it arrives, we go, okay, what's next?
Yeah, it's
like,
true.
You know what I mean?
Yeah.
The athlete, right?
It's so
the
true.
athlete
It's
gets a
so true.
personal record. And what do? They go, that was cool. Let's see if I can do it better than that.
Yeah.
Right?
Yeah.
You know what I mean? Like
That's
Mary
so
Beth on the rowing machine. She's, she hit a personal best or whatever. And it was like immediately she's like, I'm going to get a new PB. I go, what's a PB? Is it like a sandwich without a J? What is that? You know? And she's like, that's my personal best. I said, you go, girl. You know what I mean? So I get it. That is a powerful statement. That's so true.
Yeah.
Golf. I used to golf with a guy. His name was Kevin Gainey, real good friend of mine. Actually, I just been texting with him recently. Yeah. And he was a good golfer. He was out there consistently. Yeah. And we golfed together either in like a charity tournament or a foursome with a couple of buddies. And I get up to that tee like you. I get that nice long one. And he used to look at me and smile and he'd go, "There it is. That's one in a row." I go, and then because what he said is, let's see if you can do it 2 times. Right? Can you step into that magnificence every single time? So, hey, I'm excited that you're golfing. I can't wait to get on a course with you and take all your money.
I love it. It's my new addiction. It's so much fun. Yeah, it really is.
I got to tell you a quick story. When Mary Beth and I were dating, I started trying to teach her how to golf a little bit, and I'm not good. I can hang in there long enough.
Sure.
And I took her to the golf range, and she's up there, and she's athletic, and she's hitting them out straight, and it's going good, right?
Yeah.
And I'm like, "Are you enjoying this?" She goes, "Yeah, this is awesome." I said, "All right, let's get you some clubs." Yeah. So I buy her a set of clubs, nothing crazy, medium price clubs. And she got a set of clubs, and I'm like, "All right, let's go to the pitch and putt, to the 9-hole course."
Yeah.
She said, "Okay." And we go to the 9-hole course, and I'm thinking, this is going to be great. Me and my bride, we're going to play golf together.
Right.
We're going to bond in nature. It's going to be fantastic. First hole, she goes out there. Great. She's like 1 over par. Second hole, she gets up there. She duffs it. Then she duffs the next one. Then she slices the third one. And then she throws her club.
Wow.
The second hole she ever played. She throws her club, and she starts screaming at me because I'm giving her too much information. You told me to keep my head down. You told me to straighten my back and stick my ass out. Your fault. Threw her club. And I'm like, sweet, lovely, beautiful lady.
Oh, wow.
You have not played nearly enough golf to earn the right
to
throw
a club. Yeah.
And that was the last time we played together. Yeah. So she didn't wait 10 years for a moment of magnificence. She had her own agenda. What the hell are we talking about golf for? Where are we? Who are we? What are we doing here?
Well, I mean, we were just talking about the importance of the importance persistence pays. Yeah, because you said you were having a bad day. You said
well, I was surrounded by inefficiencies first thing this morning. It drives me absolutely nuts, bat crazy. I can't take it. Can't take it.
Yeah, so when you have
me grumpy.
incompetencies, let me tell you, you would not do well with working with these Portuguese people. I'll tell you that. Yes, I will. I'll tear down.
You can't say that
I
on
will.
TV.
I will tear down my own nationality right now because it is about bad processes, slow processes. It would drive you bonkers, Dave. Seriously,
Really?
bonkers. It's so bad.
Okay.
It's so bad. Like what you got today.
They can make great bread.
Like, what you got today, I've been getting for over a year in all weird kind of capacities. It's that I actually learned how to like breathe and just like, okay, just calm down. Yeah, because it's like crazy.
Yeah, I'm not easily like I've seen some stuff in my life. You know what I mean? I know what a true emergency looks like.
Yeah.
But it's incompetency, man.
It is.
Why is it tolerated? It's like,
how do you have this job? Dave.
If I was Jeff Bezos, hold on. If I was Jeff Bezos, first thing I'd do is I would buy Bank of America and fix it.
Yeah, that would be a good idea. But he's not going to do that, because he would he would have like you could open up. Can't you open up? You can open a checking account online though with Bank of America, right? But not a business banking account.
No, you can do a business banking account, but you go through all the drop-down screens, you fill in all the information, and it says, we cannot approve it at this time. You need to go to the branch.
Exactly. That's my point. It's like they have half of it, and it's like, why do you have this feature available?
Then they say, make an in-person appointment. So you hit the button for in-person.
Oh, that calendar doesn't work. That calendar doesn't work.
The pop-up screen says, we're not taking any in-person appointments at the moment in time. Do it online. And
Yeah.
I'm like, no, I don't want to do it online because I need to give you paperwork. So then I hit the button again, and then they say, okay, you can make an appointment. And then they made an appointment for me in Las Vegas. I'm in Massachusetts.
That calendar doesn't work. It doesn't even work. You can try. That calendar will show you multiple locations. They want you to fly there. It doesn't
Why are you picking up my scab like this?
No, because I've been there. I've been down that road before. Not with BOA, but with other banks, Wells Fargo. I've been down that road. It's ridiculous. But
I went to the branch. Hold on. I went to the branch to open up an account that will have $3 million wired into it in the next 30 days.
Yeah.
And the idiot wouldn't open up the account because if he did it the way it was structured with my business entities, he was too worried about getting fined by his superiors for opening up an account the wrong way. That's what
crazy.
He said to me.
Oh, that's crazy.
And that was when I stood on his desk, ripped open my shirt like the Hulk, and screamed for the guy at the door with the gun to come get me.
Hey, how about this one, right? Here's a classic one. The bank orders the appraisal. The guy does the appraisal. Wow. No, wait. No, this is priceless. It's priceless. The bank orders the appraisal. The appraisal takes a month, comes back to the bank. Hey, you got to come in. No, just send me the appraisal. No. Come in to the branch. Right. I look over the appraisal. No, excuse me. Hold on. I'm sorry. Rewind. I go into the branch. You have the appraisal? We have it. Thanks for coming in. We have it, but we haven't looked at it yet. I said, why am I here? Oh, to let you know that we have it and we're working on it. Please. No. It gets better. Wait for it. Okay, can you please give me those papers? No. I will email it to you. Okay, email it to me. Fine. 4 days go by. I get an email. I look over the evaluation. I even have my buddy look over the evaluation. We had dinner together and we looked over the evaluation together for 2 hours. The next week, Dave, I go back to the bank, set up a meeting, go back to the bank, and my business partner's there sitting with me, my tenant business partner. He comes with a stack of papers, the evaluation also. We put the evaluation on the desk. Guess what the banker says? Opens the papers. What's this?
No.
The evaluation. No, it's not. Yes, it is. No, it's not. Calls the other girl. She comes over. She says, what's this? I said, the evaluation that you guys ordered. This isn't the evaluation. I said, where would I have gotten this evaluation? Dave, incompetencies? I said, guys, did you look at the evaluation? They said, no. I said, why are we here? Why are we here?
So watch this. Listen, this is actually a good topic, man. I think we should stay on this for a little while because you know what it is? It's financial ignorance. Because you know what they're spectacularly efficient at? Charging you $3 every time you use your ATM card. They're spectacular.
Right?
They're spectacular at hitting you in the wallet every time you're $1 close to an overdraw amount. They're spectacular
Exactly.
at charging you $26. They're spectacular at charging you for wires. They're spectacular at offering you shitty credit card rates.
So true.
And telling you that that's the only way you can do it if you're using their ATM cards.
So true.
I tried to find a new connection at Bank of America. I get on a phone call, and all I want to hear is, we've looked over your paperwork application. Go in and see the guy at the branch. He'll have the papers ready for you to sign. That's what I wanted to hear. You know what I heard? Well, I'd like to take a look at your Advantage account. We see a possibility where we can help you with processing and your payroll. And can we tell you, we noticed that you're using American Express. American Express is rather expensive. We would like to show you the benefits of our business credit card. And I'm like, if I could have gone down the phone and smacked this lady with love.
Oh, man.
I'm like, you have no idea who
so
you're
true.
talking to and what. Don't sell me
It's
on
so
a bank.
true.
Right? Service me.
Service
on a bank.
me. So true.
Don't sell me a real estate deal to invest in,
Oh,
right?
man.
Service me on a real estate deal to invest in. Show me why
So
I
true.
am the most important person. And that's one of the things in business that just seems to have gone by the wayside, Nate. It's discouraging, dude.
Yeah.
It's discouraging, you know?
It's so true.
Selling everything on cars, boats, and leather coats, and you know.
You bring up
bro.
you bring up some great points though. They are spectacular on all those other things for fees. Yeah. But when it comes down to like common sense, like you can't even Like come on.
Right.
Give me a break.
Right.
Oh, it is.
Look, we'll end it with this.
Yeah.
Right. And I know you can identify with this as well, resonate with it.
Yeah.
When I needed money, right, I couldn't find a banker to give me 2 minutes of their time. Right.
Yeah.
When I don't need money, they'll call me.
You
They'll
need
set
money?
appointments with me.
It's so
they don't service me.
true.
They just want to
It's
sit in
so
front of me and
true.
try and sell me some shit. Right.
That's so true.
But it's like it's so upside down.
It is.
It's so upside down.
That's
it
so
really
true.
Is. So
Oh.
anyway, I'm hiring a CFO, a chief financial officer, so
Right.
that I don't have to deal with any of this crap ever again. I just want to report at the end of every week.
Yeah.
Money in, money out. I want to look at the bottom right-hand corner of every spreadsheet that comes into my life from this moment on.
Yeah.
I'm done with it. I'm done with it.
I don't know if you're interested in remote CFOs. Actually, I hired a CFO just a few months ago. It was a fractional CFO though, because I don't need a full-time one. And I ended up using a service called TopTal, TOPTAL.com, TopTal.com.
Yeah.
And basically it's a recruiter that works on your behalf to find this kind of talent. So I don't know, that you might want to check that out, or if you know someone.
I might check it out. I mean, I need it in house. I mean, I'm dealing with tens of millions of dollars.
Oh yeah,
So I need it in house to add to the rest of the team. But,
yeah, that's true.
I've also, you know, what's funny? I always talk about delegation being the key to salvation, right?
Yeah.
Oh, the lane you're in.
Yeah.
One thing that I have a really hard time of letting go of is oversight of financials.
Oh really?
Because look, man, I'm a steward of everybody's money. Right?
Yeah.
I'm steward of the capital.
Yeah.
You write me a check for $750,000. I'm responsible for that money. I
Well,
treat it better
yeah.
than I would my own.
Right,
So,
I completely agree with you. I guess what your CFO doesn't have to have like whatever like signatory rights or anything like that. But yeah, I completely agree. Like being a fund manager, you are taking on that responsibility. That trust is with you, not with the CFO, right? It's with you.
yeah.
And
Yeah,
that's
but the argument can be made, right? I manage the manager, so
yeah,
it's always trickle down. It's top down economics, right?
true,
Little Reagan business right there, trickle down economics.
true,
But yeah, I own it all at the end of the day. So
true.
hey, let's look at that deal I sent you.
Yeah,
Sweet
let's.
little deal. We don't do the thing anymore. Do the thing that we used to
You
do.
want to
We're
do the
like
thing I used
almost
to do?
finished, and we haven't done the thing.
Yeah,
Do the
well,
thing.
yeah,
we got.
can do the thing.
I mean, we're all over the world now. You know what I
We
mean?
are, well, yeah, we've been international for a few months. That's
Nice.
the good thing. But if you are new to our show, which I do see some new people, David, thanks for joining in. And Jill, good to have you here. This is the Cash Flow Show. We are your hosts, Dave Seymour and Nathan Amaral. This is the best place on the internet to learn and discover about commercial opportunities, commercial real estate opportunities that you can invest and leverage your portfolio to higher heights and get better
So good.
better returns on your investments. If your investments are choking and struggling or are constantly on a downturn, listen in. We got some good stuff for you today, especially with this 48 unit that we have on the
nice
table
little
here
deal.
today.
Nice little deal.
Let's
Yeah.
go over to this one. Oh, it's all over the place over there.
Oh, there you go.
It's all
What you doing over
Yeah,
there? We're in the
we
bottom
got-
right corner. Now
there
we're
we go.
back.
Here we go.
So I can't. This is a sweet little deal. This one's just prior to. I think LOI's in. There's a little bit of negotiation going on it right now, but it's a sweet little deal. I can't give a ton of information on there
Okay.
because of the NDA in place.
Mm-hmm.
But just know that, as you can see there, it's in the Orlando MSA. Orlando is on fire now. Tampa,
Yeah.
Naples, Orlando, St. Pete. These areas in Florida are just kicking butt and taking names, and I'm so blessed to have a team that's been down there, like I say, over 25 years. So we got the recognition of being the player in the marketplace. So this, hey David, good to see you, man. I recognize that last name. I think we connected on LinkedIn. But anyway, this property is located, like I said, in the MSA in Orlando. And the city and the area that this particular property is in, it's gone through a nice little renaissance. It's gone through a growth period. The city plan in place has been executed upon. So there's been a lot of infrastructure, a lot of capital put into this particular area. It has the typical that we love, the mismanagement in place, a lower rent portfolio. It's all 2-bed, 2-bath. Each of the units are around 900 square feet. So it has a very nice demand, if you will, portfolio in place as well. It's got a nice demand structure that's there. Lease up of the couple of empty units it's already done, and we haven't even bought it yet. That's how good the demand is and the waiting list there. So as you can see, cash flow on it in its current condition, acquisition price on its current cash flow NOI, we're targeting around 5.28. Our strike price was 5, but we've come up a little because we see some opportunities that some of our competitors have not seen. There's only us and maybe one other potential buyer in this, so we're confident we're going to be able to take it down. With the repositioning that we do, so that is minor cabinetry work, the basic kitchen stuff. This is your absolute solid B+ asset. Core meaning cash flow on the time that we buy it, plus meaning a slight repositioning that we can do through work to the facilities, through the kitchens, baths. It's got some great walking trails. It's on 6 acres, so it's a nice community. It's not fully gated, but it does have a gate to pass through to come into the community. So it gives us a nice, I don't know, how do you put it? It gives a perception of security and safety.
Yeah.
its image is good. We'll make it better when we get in there.
Right.
But when we reposition, we're looking at a 1-year increase in cash flow based on our property managers and the operations that we put in place. We got some new strategies now for what we call out of the wall or out of the structure NOI increases. We've got some new partnerships that we've started to build out, where we can increase NOI through external services for our tenant base. So that's good. It's more capital for our investors going forward. So NOI 43,200 in additional cash flow year one. So the cap rate that this is trading at gives us an increased valuation by the end of year one of approximately 700,000. So in this one here, this will be probably a fund deal. We haven't finally figured out whether we want to do it as a separate deal on the side. There's a couple of investors who have been waiting. They're funny. It's the old adage, right? What is it? Should I wait to buy real estate?
Yeah.
And we always say no. We buy real estate and wait, right?
Yeah.
So I've got a couple of investors, and you know who you are. You're listening to me. You got you've been dipping your toes and talking turkey. Well, this is a nice little deal that they can come in and do the capital raise. On the whole thing, and we'll take out the rest of the financing with our banking relationships. But as you can see, the numbers are very, very strong. Walter wrote this out, I believe, on a 48-month hold because of what's going on in the marketplace. We'll maximize returns over 4 years. So the average annual cash on cash on this one, we're targeting out at 14.6 based on our underwriting. The internal rate of return at 18.3, and then the equity multiple is very strong at 2.4. So we'll add this to the 81 doors that we're closing on beginning of next month. Awesome. We'll add this to the nice little 8 unit that we're closing on next week. We've got 72 doors that we're in final negotiations on in the villages. What else we got going on? We picked up a nice 25 unit in Naples and another 18 unit, a nicer higher end property in the Tampa MSA. So we're on fire, brother.
That's fire, yeah. Hey Dave, I want to ask you a few questions that these are common questions that sometimes come up. You mentioned it's a 48 months terms.
This is a 48-month term, yeah.
Yeah. So
right now it might go 36.
Okay.
It might go a little bit longer, but when we everything is based on exit numbers, right?
Right.
Maximize our profit.
Right. So someone who's interested in investing in this 48 unit, this is not like a super big property, like 100 units plus. So this is kind of like a sweet spot. So someone who's thinking about, making this investment and being a part of this 48 units, what does that look like for them? Like when we say like 48 months, 48 months, what does that look like for them and what would happen during
great
that
questions. Time? Yeah, great questions. So you can see on there, we've got 5.28. So we'll make the math easy just for the sake of conversation.
Sure.
So it's a $5 million acquisition. So out of that, we'll do a 65% loan to value with the bank. So let's say our equity raise on this is about, I don't know, maybe $2 million. Okay. So we'll raise $2 million from our investor pool. And the reason that I was talking about 1 or 2 investors on the sidelines, I've got check writers in that $2 to $5 million mark who would take out all of that equity position. So let's say I've got an investor who wants to put in, let's say we've got 4 investors and they all want to put in 500 apiece on this. So what they do, they put that 500 in. They're going to be an accredited investor. And in return for that, on this deal here, there'll probably be around a 6. That deal's actually better. There'll probably be around a 7.5%, what we call a preferred rate of return or a pref. So the first 7.5% of profit on a monthly basis will go to the investors. And then after that, they get into what's called a waterfall structure with us of 75-25. And what that means is we get 25% of the profit over the investor's 7.5 or 7% preferred. So the investor, then the blended target, as you see there, is 14.6. So if you're putting up $500,000, you have an expectation of a quarterly return that will blend out over that 1 year at around 14.6% quarterly distribution on the money. Okay. Then for the period of time that their money is held in the property, what's the value of their money working over a 4-year period of time? Well, that's what's called the IRR. So that's, coming in at around 18.3. But then it's the equity multiple is the number that grabs your attention in this particular deal, because if I put in my 500,000, in 4 years I get my 500,000 back, plus another 500, 700,000.
Yeah.
Right, 750.
Right,
so
but
I more than double my money in 4 years.
a lot of people are familiar with, IRAs, or they have money in their IRA and they're earning, 4% interest and 5% interest in a very volatile market. So what would you compare that number to? IRR, compare it to their 4% annually. What number would you give someone?
That IRR, I mean, I would focus more on, instead of looking at the IRR, to do a like comparison to a retirement return. What did you make in your retirement account last year? Okay. Is the question I would ask. And the industry standard, the average is around 7.5, something like that. Okay. Retirement account. Doesn't take into consideration the the money that has been chewed up by the expense category in there, the compounding cost. Right. So if you're in 7% in a retirement account, compare that to a targeted 14.6% secured by sticks and bricks. And I don't care who you are, the market will correct. We don't know when, but when that correction happens, reflect back onto those 401ks at the last financial crisis. The joke when people would stop feeling the pain was your 401k is a 201k, right? Yeah. And not all of those, right? Not all of those 401ks ever got back on par. Either. That's true. Some of them are still trying to fight their way back. So that's how I would do a side by side. Okay. And at the end of the day, it's about diversification. Is everything you're doing all in one basket? Yeah. Do you have these alternative investments in your retirement portfolio? And if not, why not? Usually because people haven't listened to guys like us, or they haven't got on the phone and had a conversation. They haven't asked the questions. Well, I think it's also it's again, there's another the traditional mindset, and this takes a deeper conversation. Most people, when they go get a job, they get a 401k, and it's like, tick a box. How much do you want to put in? Here's what we're gonna match. So really, people all they think about is how much can they put annually, how much is my employer going to match, and then they move on, right? And they get these statements every, whatever quarter, or, annual reports. And a lot of people don't realize that there are other alternatives because they're not presented. They're not really presented on the forefront. But these alternative investments have much higher returns compared to what they're familiar with. Yeah, and look, the mindset that I grew up with, and maybe you as well, you're younger than me, but you just said the higher returns. Well, the mind usually goes, well, higher the return, higher the risk. Yeah. Right? So where do you get that from? Well, that's been sold by Wall Street. Wall Street sells that message. Wall Street has more money for marketing than I do, so their message is listened to more than mine, right? We're always competing with Charles. Damn you, Charles Schwab. You know what I mean? All of that BS that we listen to, right? Right. What's the other one? Fidelity. Fisher Investments. Fisher Investments. This kind of looks like a Fisher Investments commercial, right? Yeah. And I'm supposed to come on your screen, but you're in Portugal, so I can't get to you. Yeah, I can. Yeah, he's yours. But, the interesting thing is when you compare risk exposure and return expectation with stock market and commercial real estate, multifamily, specifically what we do, not offices, not industrial or leisure or any of that. I mean, sticks and mortar and bricks. When you compare the risk exposure and the return expectation, historically now, and I can only make these statements based on past data, past information, 20-year look back. Multifamily has the same risk exposure as the bond market, which is the lowest exposure out there. Right. And yet it has a return expectation similar to the stock market at its very best 9%, right? Or better. So, where can you go and get the very, very best security with the very, very best return without it being exposed? Well, it's commercial multifamily real estate. So always has been, always will. The only other class I throw in there is self-storage. self-storage facilities have a very, very strong track record as well.
Is that because, I'm surprised you mentioned that. Is that because of people relocating and...
Great question. Think about self-storage, right? Self-storage, and we're looking at this asset class for the next fund.
Okay.
But self-storage is market resistant, right? When the market is doing really well, people buy stuff.
Yeah.
They buy so much stuff, they move it out of the garage into the attic, out of the attic into the garage, out of the garage, go get a self-storage unit.
Right.
And typically they stick, 5, 6, 7 years.
Yeah, that's true.
I mean, when my oldest boy's grandmother passed away, I had a whole house that went into storage.
Wow.
She's now been gone for almost 8 years, 9 years. And nobody has gone back to that self-storage facility from the day that I put old grandma's stuff in it.
What?
Yeah. Nobody has even lifted up the door and looked inside.
Why?
Right? Well, it doesn't matter why.
Okay.
I'm making a point.
No, I know, but here I am, Dave, let's dig into this.
There's treasure in there.
No, okay, so
I'll tell you why nobody's gone back. First of all, I'm not paying for it.
Okay.
Right? Because if I was paying for it,
you'd be like,
disposed of the contents.
Right.
Right?
Yeah.
But you and I are entrepreneurs.
Sure.
The majority of the people out there are financially illiterate.
Right, and they just keep
bill that
paying.
just gets paid every month, and they don't think
Yeah.
about it. So it's resistant to the ups and the downs of the marketplace.
Yeah. I've been in that position though before, Dave. I had a storage unit in 2 locations for 2 years. So I had one in Massachusetts, one in North Carolina. And I was like, I'm going to keep my stuff there because I don't know exactly when and all that stuff. But I was, at that point in time, I was like, man, some people, I was talking to some people in the area, they had storage units for over 5 years. And I'm like, what are you keeping?
Think of the amount of migration, right? The amount of migration that's gone on. And that creates a massive opportunity.
That's so true.
I got an attorney down in Quincy, just came into the fund, came in through his retirement account. And, he said to me, I'm not going to put it all in multifamily. He said, I like the idea of self-storage. Mm-hmm. He said, do you know anyone? And I'm like, yeah, I know some of the very best self-storage operators in the nation. That was one of the blessings of being part of the TV show and all of that stuff that we did years back. So,
True.
It's smart to explore those,
Yeah.
It's smart to explore those. But again, look, everybody wants somewhere to live.
Yeah,
first,
that's so true. Yeah.
And then,
that's a primary.
when the market corrects and things, shrink, we see a reduction in occupancy for home ownership. They're going to want to put their stuff somewhere when they come to one of my apartments. Well, maybe we'll have a self-storage
on the side.
Next facility.
It's next door.
So, right next door. Or even on site, we might build a little something. Secrets. So, it's good stuff.
That is good stuff.
I always feel better after talking to you, man. I do.
It's always a good time here. It's always a good time. We always have a good time.
Yeah.
Oh, man. Well, this has been really fun. It's been great, but our time is up here today, Dave. But we will meet up next week. Everybody, thanks so much for watching and tuning in to the Cash Flow Show. If you have any interest in these type of investments, even in that 48 unit, what you need to do is get in touch with Dave at freedomventure.com. Dave, what's that phone number that you usually give out, by the way?
781-922-4418. It's my direct office line. Let my assistant know that you heard us on the Cash Flow Show.
Years
781-922-4418. Dave at freedomventure.com, info at freedomventure.com. We got a brand new website. Check out the new website, freedomventure.com. Just spent a lot of time and money making that. We repositioned our website.
And guys, just so you're aware, years ago, many moons ago, Dave would only give out his cell phone number to people who paid for his programs.
Then I elevated my game. Now I got people who interference. If you want to invest $500,000 with us, I promise you we'll have a phone call before you do.
Good stuff. Thanks so much, everybody, for tuning in. We'll see you next week. Have a great day.
See you, brother. God